Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Honasa Consumer Limited, the parent of MamaEarth. Joining me is Varun Alagh, who is the CEO of the company, and Ghazal Alagh, who is the Chief Innovation Officer of the company. The company is coming out with an IPO which opens on October 31st, closes on November 2nd, price between 308 to 324. It's a fresh issue of 365 crores and OFS of 1336 crores, making the total issue size of nearly 1700 odd crores. The company is coming out with 16.32% of the equity. Promoters are offloading 1% odd through OFS. Varun and Ghazal, thank you very much for joining us on BQ Prime. Let me start with the obvious question. You're raising 365 odd crores. What are you going to use that for?
So I think the use of proceeds is largely going to be to drive growth for the company, and by investing them in areas like brand building, and by investing in areas like expanding our exclusive brand outlet footprint in more cities in India, and by expanding some of our Be Blunt salons that we have acquired. And apart from that, there is the general corporate purposes where we can potentially look at acquisitions in the future, and is how we intend to use this.
Okay. Can you give me a sense of the business model that you have? How do you do it? Because you're primarily online, if I'm right. How do you plan to scale it up? And which are the segments that you're focusing on?
So we are Honasa. Honasa is actually a house of brands. The journey for us started 7 years back with our first brand, which was MamaEarth. We are also husband and wife. So journey for us started as parents who were trying to find the right kind of products for their son. That's when we figured a white space in the market, and we came in with MamaEarth. I think the journey over the last 7 years has been incredible. We have received a lot of consumer love, largely because we were understanding the Indian consumer. We were understanding the cultural nuances that the consumer believed in. And that worked in favor for us. Over the last 7 years, I think we've also built certain capabilities and strengths as an organization, which has helped us launch newer brands. So we also have a brand called the Dermaco, which is a brand based on scientific active ingredients for your skin for concerns like acne pigmentation. We have Aqualogica. We've also acquired 2 brands, Be Blunt and Dr. Sheth. So what started as a 1-brand company is now 6 brands strong. And MamaEarth, of course, is the oldest one, has scaled beautifully, and the other brands we believe will follow suit.
So you are primarily using a online distribution model, if I'm not wrong, right? And it's an asset-light model which you
yeah, Sajid. So yeah, I think on the business model, what I would say is that we have a very unique business model which relies on understanding today's consumer much better. And in our business model, everything starts first in the digital and e-commerce space, right? Because there, your ability to reach out to targeted consumers who are specifically looking for a certain type of product, and then being able to service that demand anywhere in the country. And I mean, from one location, you are actually able to service 25,000 pin codes of the country. And that gives you a very good sense of what is it that the consumers are loving the most. And whatever you get really good traction on, is then what you take into the offline and physical world. Because you've already checked that this consumer is looking for this product, and they have shown interest in that product. And you also know which pin codes is the demand coming from. And then basis that, you actually go into the physical world and distribute that product as well. So I think it starts in the online world, but then over time, as the product sees demand, and we expanded into the offline world. We are now there in over 100,000 stores in India.
My question to Ghazal is that, you began by saying that, as a parent, you were looking for products for your kid, and that's how you began. But MamaEarth, what is the kind of contribution of kids specific products that come to you as revenues?
So I think we started as a baby company because that was the vision. But over time, of course, consumers were the ones who told us that why just baby, why not adult segment? And I think there is a difference between a baby care category as well as an adult segment. And that's the proportion in which our revenues are also divided.
So to put it blank because you're coming to the market, so I will be very straight in that format. It's basically a cosmetic company coming in, and you are comparable to any other company because any other cosmetic companies, right?
No, see, we are a company in the beauty and personal care space, and
What is
in
the USP? Okay, let me put it
yes.
this way.
So each of our brands has a differentiated USP, right? For a MamaEarth, that USP is that it's a certified safe brand where all products are certified by Made Safe and to be completely free of harmful chemicals. And that's the USP of that. I think the second biggest USP that we have as a company and for our brands as well, and is that we are crafting for Indians. And we are not importing external, what the world is using and just coming and selling to India. And we understand what the Indian consumer believes in. We understand that we've been using multani mitti for so many decades, and we have got products which are based on multani mitti. We understand that Indian consumer believes in the antioxidant powers of turmeric, and we have got a range called Upton, which is based on that ingredient. And so I think we are amongst the first companies who's genuinely crafting for the Indian consumers, treating them as different from the world and serving them in a very targeted fashion.
So, will you call yourself an organic Ayurvedic cosmetic company?
We will call ourselves as a company which exists to fill consumer desires, and we are nobody to judge what their desire is. There are consumers out there who want Ayurvedic. We have a brand which serves Ayurvedic formulations. There are consumers out there who want natural products. Mamaearth serves that demand. There are consumers out there who want dermatologist designed products. And we have a brand called Dermaco, which designs products according to that as well. And so I think we're a company which exists to serve consumer demand.
Varun, let me come to the financials part of it. FY23 it was a loss making, but Q1 you showed profit of 24 odd crores. What is the profitability trajectory that you have, and what and can we expect FY24 to be profitable given that Q1 was a profitable quarter?
I think what I would say is that as we grow, we're seeing the business getting leverage on multiple fronts. And the first area where we are getting more efficient and we're getting more leverage is the area of brand building and marketing. Once you have built a brand to a certain level, once you've built a brand awareness to a certain level, then the amount of marketing needed as you move forward continues to sort of reduce. So that is one area where we are continuously seeing leverage year on year. And the other areas are, for example, OPEX leverage or some of the other places. And as a company, we will continue to focus on finding these leverage areas as we move forward.
Since you're on platforms and online e-commerce accounts for nearly 65% for you in terms of revenues, you also look at higher discounting in these platforms, right? Means I was looking at some of the numbers. It was 105 crores that you had spent on digital platforms in FY23, and in Q1 alone it was around 44 crores. So it was an aggressive spend going on. So do you propose to continue with the higher discounting model in the foreseeable future, or will that be tapered down as we go ahead?
Sir, actually, the numbers that you talk about are not discounts. And all of this spend is in consumer-facing media. And what is happening is that all platforms also are becoming places where you can do marketing to consumers. Right? So we work because all of these platforms, be it Amazon, be it Nykaa, some of these platforms, right, are platforms where consumers are coming to buy things. And you have an opportunity to actually show them and tell them your brand story and talk to them about why your brand is a better brand to buy in that space that they're looking for. So these spends that you see are those spends where we are showing consumer-facing media on the platforms where consumers are coming to buy. So this is all a part of brand building in our view, rather than
So
discounts.
will that continue in the foreseeable future, or is
So
it going to taper down?
What we see is, sir, if you look at it, 3 years ago we had one brand, and we now have 6 brands. And the numbers that you see represent a combined spends of those 6 brands. And some of these brands are actually very young, but are growing very, very fast and are showing very strong signs of becoming large mega brands in future. And so we are choosing to invest in those brands. But what we have seen is that as brands scale, the need for these investments continues to go down, which is what we are seeing happening on MamaEarth.
Okay. Give me a sense of how you have managed the platforms, because you are there in Amazon and other platforms which are there. What is the kind of fee structure that you have there? Because you have a lower fee structure compared to others what you pay currently. That's what my understanding is. Does the fee structure vary with the kind of volume that you do? How does it work?
So, Sajid, I think this is a bit of a misunderstanding. We are actually present as sellers on Amazon, Flipkart, all of these places, and hence we are treated as any other seller would be treated. But yes, most of these platforms do have tiered seller programs. And
Yeah.
so you might be selling toys, you might be selling clothes, you might be a seller selling any other thing. And as your volumes grow up with these platforms, and they do have a tiered structure where they reward you with better terms as you grow. But that is applicable for any other seller who also works with them. But because of our scale, we do fall in the top tiers for these platforms.
Because you're in the top 5, if I'm not wrong, sellers on
Yes.
On most of the platforms. That's why I was asking whether, is there a tier structure of fees that you will have to pay, and does it also help you in pushing your product across to multiple price point, multiple consumers and across regions?
So I think we don't believe in pushing. We believe in generating pull, and consumers come search for our products, and they find them
Oh,
there.
because you have a marketing push,
Of course.
so you're
We
doing a
call it
marketing push,
marketing
which
pull.
is
That's a
creating
pull
a
that
pull.
we are creating. Yeah, that's. I don't think we call it push. It's a pull that we are creating to attract.
You create excitement. You tell consumers about something new that they were looking for, and they finally can find it in your products, and consumers then come looking for it.
Varun and Ghazal, come in here. When you first announced your DRHP, there was a lot of hue and cry about the valuations that everyone spoke about. You're coming at a valuation of 10,400 crores at the upper end of the price band. In September, you did a preferential issue at 262, and you are now looking at 324 at the upper end of the price band. Give me a, just justifiable argument for the valuation.
No, so what I would
Don't
say,
tell me that your bankers have said that.
but they do have a role in arriving at this. And of course, it's a process which where we have engaged with over 100 investors over the last 2 months. And it's an exercise which entails understanding of not just where the business is today, but more importantly, where the business is going to be over the next over the medium term. And in keeping those things in mind, are these numbers sort of arrived. And from the number of 262 that you talked about, actually, the last primary round that we had in January of 2022, almost 1.5 years back, and is when the shares was issued at 262 rupees, right? Which is where Sequoia Global invested into the company and also bought secondary shares. Right? Now, in those 1.5 years, of course, FY23 over 22, we grew by 58%. In Q1, we have further grown by 48%. But the price band is only 24% higher than where we were 1.5 years back. And I think that math should tell you that it's a good place to be.
That's a good argument, but I hope the street buys in that as well. But give me a sense of how you plan to grow, because you've been growing at a very aggressive rate. How do you plan to grow going forward? Because you're spending 182 odd crores on marketing expenses going forward. It's basically acquisition of customers as well, which basically means that, right? I mean, in your e-commerce parlance, that's how many of the companies do. How do you plan to grow at that top line and maintain EBITDA margin? Because you got an EBITDA margin of 6.3% in Q1. How do you scale that up?
I think from a growth perspective, we want to continue to invest in building of our brands. And because in our business, you need to first drive awareness of the brand. And only when a consumer is aware of what your brand stands for, what it sells, and why it is better than others is when they buy. And but once they start buying into brands, the longevity and sustainability of brands is very, very long. And so I think that's how this needs to be seen. And which is why consumer companies and consumer brands last for not just decades but some of them for centuries also. And, I think what we desire to do is continue to delight our consumers with amazing products, high quality products, amazing innovations, and I believe they will reward us with market beating growths as we continue to sort of build this out. We genuinely believe there's a large opportunity of capturing growth and share out there. And I think the ambition will be to ensure that we continue to grow faster than the market.
Since you are on digital, you should be able to capture this. What percentage of your customers are repeat customers?
So, the D2C part of our business is about 20% of our business, right? Which is where we are able to capture this. And what we have been seeing is that the repeat percentage contribution for our D2C platform has continued to go up. And from a 35% 3 years back, it's almost 60% of the business comes from repeat consumers now, and which is a strong indicator.
Ghazal, one question to you. You've been aggressively adding SKUs to the portfolio, and since you're the Chief Innovation Officer, let me ask you, what is the kind of pipeline that you have for new products?
See, we very strongly believe that innovation is at the heart of the organization and is one of our core strengths, which helps us set us apart from some of the other large players. We innovate listening to consumers and giving them what they are looking for rather than just looking at market sizes or opportunity sizes. And because, like you said, we are digital first, we have that capability to serve to the long tail by keeping our products in just one warehouse and serving it pan-India through that, right? So I think that is one of our core strengths, and we very strongly believe that we will continue to innovate, listening to consumers, and if they're looking for something and we as a company across all our brands can provide that to them, we will continue to deliver that.
Your brand diversification has been primarily led by inorganic growth, right? Acquisition, Be Blunt, Dr. Shade. Do you think that the future growth also lies in inorganically looking at more brands who can fit your digital channel better?
So, Sajid, I would like to correct. Our growth has actually been driven organically. In fact,
I'm talking about expansion, product expansion. I'm talking about product expansion.
The two brands which are actually the largest after MamaEarth are Dermaco, which has hit a 300 crore run rate in just 3 years of existence, and Aqualogica, which has again hit almost a 12.5 crore plus monthly run rate already in less than 2 years of existence. And both of these brands are organic, right? After this, we have done acquisitions of two brands, which is where Dr. Sheth and Be Blunt comes in, and where again we bought them when we were very young. Right? Dr. Sheth, in just 1 year, we've been able to grow 20 times in terms of size. But that growth is something that we have driven organically. And we didn't buy a large brand and add inorganic growth, but we bought a small mix and grew it disproportionately, is how you should look at it.
I think, Sajid, to that, I'd also like to add that we truly believe that we are brand builders, right? We have demonstrated the same with MamaEarth. Dermaco and Aqualogica are also growing very strongly. So our core strength and capability is actually to build brands, and that's something that we are going to focus on.
Varun, since you're coming to the markets will be asking you this very often every quarter about the advertising and marketing spends, how you plan to do that, and how you want to plow back your cash into this advertising and marketing. Is there a game plan that you have in mind? Because you have been aggressive in this area for some time now, and it's a growing business. So is there a plan that you have, or what percentage of cash flows you will be putting back into the business in terms of advertising and marketing, or how do you go about conserving cash and bring in good margins and profitability?
Sujit, I think we genuinely believe that beauty and personal care is an amazing and attractive space to capture in India. It is growing as amongst the fastest FMCG subsegments, and with rising disposable incomes, and more importantly, women joining workforce as a mega trend over the next 2 decades. And this category is going to boom, and we are out there to capture the highest share of that growth. And we also believe the category is growing because consumers are premiumizing and they are looking for better options than what they were using in the past, and to sort of upgrade their quality, to upgrade their sort of lifestyle. And I think we're the company which is providing those brands which are helping them upgrade to much better products that have been what they've been using. And that will be the conscious sort of investment decision in terms of ensuring that we are able to capture the larger size of that growth. And that does involve us investing in brand building, and but that short-term investment leads to a strong long-term outcomes, right? I mean, MamaEarth is the fastest brand to hit 1,000 crores, and in just 6 years' time, and no other brand has been able to do it. And with 70% gross margins, and if we are able to hit such scales, and I think in the longer term, the everything else in terms of bottom lines will follow. But in the medium term, we want to go aggressive and capture the share in this market.
So basically, you're saying that you will be aggressively spending on advertising and marketing. That's what you're saying in the medium term.
Yeah, but Sajid, what I'm also saying is, and what I mentioned earlier, right, is that when you're in that brand building journey, and initially you do have to invest, but as the brand scales up and the leverage starts to kick in, and वो एक certain number fix हो जाता है, percentage में it starts to reduce, and which leads to better bottom line sort of coming through. So I think that we have already seen in the journey of MamaEarth, where we continue to see it getting better. And I think for our other brands also, because it's finally sum of parts.
Yeah.
We now have 5 more brands which are in investment mode, and they will also see that same journey. And so over time, I think all of that will finally flow through.
Ghazal, 132 stores planned over the next 3 years. How do you, where are these stores planned, and what kind of contribution do you see offline to contribute maybe in 3 years hence?
I think the plan is to continue to be there where consumers are looking for us. That's how we started. That's the omni-channel company that we've built. And going forward as well, like you said, we will continue to expand our footprints. The team works on identifying the right places where they see consumer demand coming in from, and that's going to be the plan.
And how do you see offline contributing maybe 3 years down the line?
So I think for a MamaEarth, which especially is the most scaled brand in our portfolio, and is where we have clearly seen that the consumers now want to buy the brand in the offline and physical stores. We have already in the last 3 years, reached almost 120,000 stores in the country because of the amount of pull the brand has. And we continue to double down on that. For MamaEarth especially, the growth over the next 3 years will be driven by offline expansion. And we are very confident that we will continue to focus on that.
And you will continue to spend more on advertising for the next 5 brands because, if I'm not wrong, as advertising cost as percentage of the revenue from next 5 was around 80% in FY23.
Yes.
It came down to 40% 44% in first quarter.
Yes.
So,
you have given your answer yourself, Sajid. Right?
So are you going to maintain? It could be the thing is that advertising spends can be moderated, and that can bring in more cash flows and profitability.
Yeah, Sajid, but that should
are you going to have that kind of spends? That's what I'm
saying.
saying.
So for example, what I would say is not at the cost of losing an opportunity to capture growth. Right? Okay. I think we're already seeing that even while growing really well, and some of these spends are already seeing those efficiencies, like you rightly mentioned. And even on the younger brands, and it was 80% as marketing reinvestment last year, and it's come down to 46% already because they've scaled well and they've also seen leverage kicking in. And I think that journey which a MamaEarth has followed and is something that these brands are also seeing and following, and over time, and that journey is something which will lead to better outcomes for us.
Ghazal, cosmetics is something which is very perception led and word of mouth. How do you manage that perception and word of mouth, and especially if social listening of what's happening with your brands?
See, I think we as a company have always focused a lot on consumer listening and understanding our consumers really well. We have a technology tool that we have built which helps us interact with our consumers on a daily basis and get their responses as well. And that has been something which has helped us, while you're saying consumer perception, but I would say that is something which has helped us reach to the right kind of consumers. And when consumers use a good quality product, something that they love, automatically the word of mouth spreads. That has been our core. That is what happened with MamaEarth. That is what we intend to do with our younger brands as well. Deliver right kind of products to the right kind of consumers, and then after that, word of mouth happens by itself.
And I think we are also very cognizant that, consumer listening is like a core DNA for the organization. In fact, everyone in the company, and we are now more than 900 people inside the company, but everyone in the company talks to 10 plus consumers every quarter. And we talk to consumers on the phone. We understand how they're feeling about our products, what's their feedback. And we do town hall where we bring all of that data together and we say, hey, this is what consumers are loving. This is what consumers want us to do more of, right? This is where we can improve. And as an organization, as long as that DNA of learning and willing to improve is there, right? I think we'll keep getting better.
Tell me, Ghazal, how much do you plan to spend on R&D? Because that's something which a lot of cosmetic companies spend on before bringing many SKUs or new products into the market. What is the kind of the philosophy that company has with respect to spending on R&D on products?
Sujit, when we started out, what we realized was that for us as a young company to compete on R&D spends with the larger players was very difficult, was something that, we had to figure out the best ways to get that right. And in that process, what we learned was that working with the right kind of partners really helps you a lot. While we have our own internal R&D, and that's our core strength, our internal R&D actually competes with the R&D of the ecosystem as well. Say for a product brief that goes out to our own R&D, we also share it with our partners. And these are large ingredient manufacturers like Ghazal, Galaxy, etc., who all of them with their R&D teams, which are really strong and are spread all over the world, also help us deliver the right kind of prototypes. And these prototypes compete with each other. We get a lot of consumer feedback. And whatever prototype consumer chooses is what gets launched as a product. So I think that, very early on, we figured that the intelligence of the ecosystem is something that really helps you deliver the right kind of products to your consumers. And we've though we have our internal R&D, which is really strong, but we continue to gain intelligence from the system as well.
Ghazal and Varun, thank you very much for joining us on BQ Prime today and joining us on IPO Adda. Your IPO is opening on October 31st, closes on November 2nd, price between 308 to 324, pricing the company at 10,424 crores at the upper end of the price band. Thank you very much for joining us today.
Thank you so much for having us.
Thank you.
Thank you so much.